Howdy, Jacob here. Today's company in our dividend yield screener is Artisan Partners Asset Management Incorporation, ticker symbol APAM. High level view of the company. Their enterprise value is pretty much the same as their market cap, a little bit less, meaning they have more cash and cash equivalents on hand than debt, so that's good. Let's see, 12 PE looks relatively cheap. From that perspective, huge return on invested capital and return on equity. Holy smokes. Interesting with it being such a big dividend stock. Let's see, so 6.09% yield. That's a solid percentage. Let's see their payout. 247, 271, 283, 289. I mean, it's like everything. And return on invested capital just means nothing with this information because they don't deserve a premium on that because they're paying out all their money that they in essence would be getting a massive return theoretically by investing it back into the business. So that's interesting. But at least I mean they can afford it because their earnings are pretty consistent. Their cash flow is pretty consistent, but that is a massive payout ratio. Let's yeah. So my assumptions were of the $2.31 dividend. I'm just saying I don't think they increase it, even though it looks like yeah they increase and decrease sporadically. But I'm assuming that stays the same because their payout is so big. It looks like that's what they're trying to do is just pay out everything that they get. So they might not have to cut it in half like other companies that may need to reinvest their capital. Um, but that's so interesting. Let's see this. Let's do assumptions for revenue growth and margin and such. So 686 mil to 993, not a lot. I might just do a classic 3 and 13 because we'll have to see how that looks. Man, 3. I mean, I can see that honestly. 13, because if they do decide to reinvest in their business, they have massive returns on it, but they just don't. So, all right, let's look at margins here. They've increased quite a bit on the income side. Free cash flow has been pretty consistent. Share change. Wow, they are increasing shares like crazy out here for how cheap it's supposed to be. All right, let's do 5% share change, a 20 and 30 on the income and free cash flow margin. So, all right, we're getting to a price with a 15% discount rate, looking like $21.05. The current price is $37.93 for a decrease to curve 44%. Yeah, 44% to get a 15% return. Gosh, these companies are so interesting with their income margins so much lower in their free cash flow and why they're increasing shares so much. Share-based compensation? Yeah. I mean, it's gone down quite a bit, but their shares have just been increasing a lot, and it's not from issuing shares, just a little bit of compensation, I guess. But yeah, definitely a company I'd want to do more digging in, but it's not even close to my buy price, so why waste my time just yet? All right, I hope everyone has a good rest of their day. Thank you.